From the News Channel 5 Network, this is OpenLine.
Hello everyone, welcome to OpenLine on Wednesday night. I am Ben Hall, and if you're like me, you have not even started doing your taxes. That's what we're talking about tonight. Where do we begin? What are we facing? What are we up against? What are some of the changes? We've talked about this a little bit leading up to now, but now we're really getting into crunch time. We're happy to have with us Dr. Friday. Dr. Friday, thank you for being with us.
No problem.
I haven't started my taxes. So what kind of boat am I in here? I mean, we're about a month out. What are you seeing?
Well, obviously, when you prepare them earlier, if you owe money, one of the nice things about preparing early is it gives you a little time to put together the money that you may have to pay by April 15th. So longer you wait and procrastinate, not saying anyone in the room is, but if that's actually happening out there, then it makes it harder, because if you get your taxes done and completed on the 7th or 8th of April, at that point, you've only got a week or so to put together the money that you're paying the IRS, or you're paying additional penalties and interest because they're now your loan officers above possibly not paying it on time by January 15th or something if you get quarterlies. So it's really important just to kind of know your finances. I mean, most of the time, I always file, like I said, I file extensions.
Right.
But I pay quarterly, so when I file the paperwork is minimal, as long as I did my quarterlies correctly, you know?
And what we want to do is give people a chance to call in with questions. And, I mean, this is free tax advice. I mean, where else are you going to get that?
Exactly. Not even the IRS offers that anymore.
No, if you're watching Survivor, you're not going to get that on Survivor. You get it here with Dr. Friday. Free tax advice, an opportunity a month out or less to get this free advice. So what are some of the biggest problems people are encountering?
Well, the health care is one thing. People are very confused about what they need to bring in, how they justify the, do they have insurance, especially if people got it like only 6, 7, 8 months of the year. They didn't have it the whole year. Are they going to still be penalized, and how much of it is the penalty? And just, getting the waiver. Many people tried to get onto the marketplace, found out that they weren't qualified or whatever, and there is a waiver that's out there. So really, just that whole additional form, I think, is throwing people for a loop and making it complicated, and the tax law is already complicated, so they don't know. So a lot of people are putting exempt. When I review a lot of people's taxes where they self-prepare them and we review them for them, and they're not exempt. So there's a big difference between 1% of your income and you're making, $60,000, $70,000, and you have a 1% penalty, or not. So they're not happy when I'm reviewing those tax returns.
No, and that is probably the biggest change for a lot of people from one year to the next.
Absolutely, and that's a big change, because a lot of these people have done their own taxes for years. Boom, you've got this change, and it's straight on the 1040. It's affecting every one of us. Unless you have health insurance, then great, you're fine, no worries, and it's not really a new form for you. But if you haven't had health insurance and now you've got this new form, and the IRS or the marketplace messed up because they sent out a 1095A, and then they found out there was mistakes, so then people did their taxes, and then they get the second 1095, and now they're trying to figure out how that's supposed to be corrected. And I mean, it's just adding additional complications.
And the other thing you hear about are the penalties. Are you going to have to pay a penalty? And what are the penalties now? There's 1%, you said?
We have 1% if you make more than $10,150. In 2015, it's 2% if you make more. So whatever you paid this year, double it in most cases. And then I believe it will go up to 3 or 4% when we hit the top. So it's going to become a healthy penalty. At this point, it's more of like a slap on the wrist, getting people warmed up for what it's going to actually come to.
They're trying to get people, obviously, to get the coverage.
Absolutely. But, most of the people come in mind, they're like, we tried, we went on, and it's more expensive than paying the penalty. That's the answer they're giving me. So most people are willing to bite the penalty than have to pay the insurance.
Oh, you mean paying the penalty is less?
Sure.
It costs them less.
$700 for one family, where it was going to cost them close to, $7,000 for the year for the whole family to have insurance.
Okay.
Penalties still way less than what the other side is.
Now, is that going to change, though? You said it's going to keep going up.
Yes, it will get worse and worse as it goes. But the whole point of the whole thing was to have a lot of people and reducing the cost of insurance, and that does not seem to be happening for the same people that couldn't afford it before. They still can't afford it, and now the difference is there is an additional penalty that's coming on those people. I mean, so hopefully that will straighten itself out one way or the other. But from the tax code, which is what this show's all about, let's just stick to that. You know, just be careful. If you're not exempt, if you didn't get a paper saying that you were exempt and there's an actual code on it that you type in as an exemption, you are liable for the penalty.
Where do you get that paper?
It came right out of the marketplace when you went in and signed up, and then they came back and they sent you a rejection letter with a waiver on it.
Now, if you have insurance, you know, you work somewhere and you have insurance, do you have to prove that?
You know, on the W-2, it will say DD, and it will show how much was actually paid out, and that will prove it. Most of the time, we just get copies of the people on the insurance, you know, just to make sure the children and everybody are covered, but there's really no additional proof required.
So it's on your W-2?
Yeah, most big companies, or most companies actually will have it right on the W-2, labeled DD.
Wow, okay. All right, well, that's good.
Yeah,
right,
it makes it simpler for most people.
So the people coming through your door right now, this is one of the big questions. What are some of the other things that you're hearing from people now?
Okay, so one of the biggest emails and phone calls and everything I usually get is, if I can't afford to pay taxes, do I file them? Because if I can't pay them, then maybe they won't notice me, because there's millions and millions of people, so you're going to slide through. Not going to happen. Big computer systems, you're a number. You need to file. Even if you don't have the ability to pay, file your taxes. Get caught up if you owe back taxes. Get caught up, because there's a time clock. The IRS only has 10 years to make collections. If you never file, guess what? The clock never starts. So file them, then work with them, and do whatever you have to do. Live out the 10 years or make payments, whatever will work for you, but get the time clock started.
We had calls last time you were on about someone that was trying to kind of wait that out, and I didn't know about that.
Yeah.
But you get the time clock started, and they can only go back a certain number of years, and so it really is to their advantage.
Absolutely, but I mean, like, I'm dealing with a case where it was back in the 90s. She never filed it, and she, the IRS is trying to collect against her Social Security, which is a sad situation. That's all she has. She was self-employed. They won $100,000 and some plus in this case. So, I mean, if she had just filed those taxes, it would have been gone. It would, nothing would have happened, or she would have made payments, whatever. File the taxes. You can become non-collectible. You can do an installment agreement, or you can do an offer and compromise. And there's all kinds of ways of making it work based on your budget.
The other thing, we talked about an extension.
Yes.
What's your opinion on extensions?
I like extensions. Just putting it out there. I like extensions, especially if you're calling me anytime after today.
Oh, no, really?
Yeah.
Oh, great.
Well, extensions are great. Again, it's to extend the paperwork, and sometimes there's a lot of good reasons for that. For example, you invest into partnerships, LLCs, sub-S corporations. We have to have K-1s from those organizations before we can file your personal tax return. So if those people haven't done the taxes, we can't do your personal tax return. It's that simple. We're waiting for documentation to come from other companies, other investments to bid on your personal. So you're going to file an extension. There is, I don't know if it's true or not. I've never actually noticed, but some people will say if you file extension, your odds of being audited is less. I'm not going to tell you that's true. I honestly think that nowadays, it's all so computerized. I don't think that really changes anything, but a lot of people believe, and of course, if you're self-employed, which most of my clients are, and you fund a SEP or a 401k or something self-directed, you have until October 15th to make the final deposit for last year. So you physically have 10 more months to make your deposit for the year before.
It's interesting you talk about audited, your chance of being audited.
Audits.
And
it's going down because the government's broke. Oh, sorry.
Well, I wondered. I mean, do you see an increase, a decrease? Is the IRS more aggressive, less aggressive? Do we have enough auditors to do this kind of thing? Let's say you're just a normal filer, you're a normal middle-class person. Are they really going to audit you? So what are you seeing more of these things or less? I'm seeing
a lot more paper audits, which basically means that they're doing matching of material from other things, either from bank accounts, from interest, dividends, all kinds, the spectrum of where your money's at and where everyone's reporting. 1099Ks, people that basically sell on Amazon and places like that. They had little businesses, but you accepted credit cards. There's a form. The IRS now knows about how much money you collected on that little website you thought you were doing as a fun little side job or whatever. So they're matching all that and then sending back letters, we've changed your tax returns because, and they're making these adjustments. So I'm seeing a lot more of that. And I mean, of course, between the state and the federal, I mean, obviously, I think there's more than enough auditors in the world. But, the percentage of audits are what, 3%? If you make less than, $250,000, if you make more than that, it goes up to like 10%.
So they do audit the higher earners more heavily.
If you make more than $1 million, your odds are about 1 out of every 3 will be audited.
Which makes sense. I mean, if you're going to put the time and effort into it, why audit somebody who makes $25,000?
That's a whole nother show we're going to take on. That makes sense. Yeah, let's punish the earners. There, it makes sense. Yeah. Okay.
All right. Well, we're gonna take a break. I think that's we can talk about all that stuff.
Yes,
if you want to call in, there's the number 737 plus 737-7587. Don't forget to dial 615.
Oh, that's right.
That's also part of it. But dial that free tax advice. Take a break. Be back right after this.